On June 12, 2026, a company is going public on NASDAQ. That company lost $4.28 billion in a single quarter. It has accumulated $41.3 billion in total losses across its history. Its main rocket, the one the entire valuation is built around, has never successfully delivered a single commercial payload. The last test ended with an engine exploding over the Indian Ocean. Wall Street's response to all of this: a $1.75 trillion valuation, the largest IPO in human history, bigger than Saudi Aramco, bigger than Facebook, bigger than anything ever. This is SpaceX, and yes, you're probably going to buy it. But before you do, there are 3 things buried in the fine print that nobody on CNBC will say out loud. I'll tell you exactly what you're actually buying when you buy this stock, and it's not what you think. There's also a single paragraph buried in the S1 prospectus that nobody is talking about, and there's one number from SpaceX's own financials that makes the entire valuation fall apart. By the end of this video, you'll either be more excited about SpaceX than you were before, or you'll feel like the IPO market owes you a personal apology. Let's start with what SpaceX actually is, because most people think they know, and most people are wrong. SpaceX is technically 3 completely different companies stapled together and sold to you as one ticker symbol. Company 1 is Starlink, the satellite internet service. This is the only part of SpaceX that actually makes money. $11.4 billion in revenue in 2025, $4.4 billion in operating profit. Subscribers doubled from 5 million to 10.3 million in a single year. This business is genuinely good. If Starlink were its own public company, it would be one of the most impressive internet businesses ever created. Company 2 is the rocket launch business, Falcon 9, Falcon Heavy, and the upcoming Starship. This part lost $657 million in 2025, primarily because Starship research and development alone costs $3 billion a year. There's also a detail worth sitting with. Over 70% of SpaceX's own launch capacity is used internally to put up more Starlink satellites. So Company 2 mostly exists to serve Company 1, and Company 3 is xAI, Elon Musk's artificial intelligence company, which he merged into SpaceX in February 2026 in an all-stock deal. xAI lost $6.4 billion in 2025. In the first quarter of 2026 alone, its AI infrastructure spending hit $7.7 billion. Annualized, that is over $30 billion a year being burned on AI data centers. So to summarize what you are actually buying, a profitable satellite internet company is funding a rocket that keeps exploding, which is now also funding an AI company, losing $30 billion a year. And the whole package is being sold to you at $1.75 trillion. There's a paragraph buried in the S1 that explains exactly what this valuation is actually based on. We'll get there. Before we do, let's talk about the part of this deal that financial media keeps burying in paragraph 14. When you buy a share of SpaceX on June 12th, you get 1 vote per share. Elon Musk's shares give him 10 votes per share. After the IPO, he will control 85.1% of all voting power in the company, while only owning about 41% of the actual equity. What this means in practice is precise and worth saying clearly. You cannot vote him out. You cannot change the board. You cannot influence how the company spends money. You cannot stop him from merging another company into SpaceX, which he has now done twice in the past few years. The prospectus literally describes SpaceX as a NASDAQ-exempted controlled entity, which is a technical phrase meaning normal corporate governance rules do not apply here. There is also this sentence from the filing itself, which I will read directly because I genuinely could not write it better. The structure allows only Musk to fire Musk. That is not a critic saying that. That is the company's own legal documentation. Now, here is the number that makes the valuation fall apart. The entire thesis behind the $1.75 trillion valuation is not Starlink. Starlink, on its own, at normal broadband infrastructure valuation multiples, is worth somewhere between $600 billion and $800 billion. That is a genuine, defensible number for a business growing the way Starlink is growing. But 600 billion to 800 billion gets you nowhere near 1.75 trillion. The extra trillion on top, the premium you are paying above what Starlink alone is worth, is a bet on Starship. Starship is SpaceX's next-generation rocket system. It is designed to be fully reusable, capable of carrying over 100 people to Mars, and the foundational launch vehicle for everything SpaceX wants to do in the next 20 years. Every large number in the prospectus, every ARK Invest projection, every analyst who says SpaceX could be worth $2.5 trillion by 2030, all of it requires Starship to work reliably at commercial scale. SpaceX has invested over $15 billion and conducted 12 flight tests into Starship. As of the date the S-1 was filed, the document you are being asked to read before collectively investing $75 billion, Starship has never successfully delivered a single commercial payload. Not one. The most recent test, Flight 12 in May 2026, ended with the engines failing during re-entry. A Raptor engine exploded, taking out adjacent engines. The ship made a hard landing in the Indian Ocean. CNN described the test as ending in an explosion. Elon Musk described it as showing major improvements. You are being asked to pay $1 trillion in valuation premium for a rocket that, as of this recording, has a commercial success rate of 0. I want to be fair here, because this is not a simple situation. Starship might work. The next test might be perfect. The engineering progress is real, and the trajectory is genuinely impressive. SpaceX has done things before that most engineers said were impossible. The point is not that Starship will never work. The point is that the price you are being asked to pay on June 12th assumes it already does. That is the bet you are making. Now here's the part that almost nobody is explaining clearly, and it is the part that affects you even if you never intentionally buy a single share of SpaceX. SpaceX will be one of the largest companies on NASDAQ the moment it begins trading. NASDAQ recently changed its index inclusion rules, and it is worth knowing that this rule change happened specifically because of SpaceX's size, so that a company of this scale gets added to major market indexes almost immediately after listing. The S&P 500, the NASDAQ 100, the total stock market index. That means every person who holds a passive index fund, a retirement account, a Vanguard total market fund, a pension. If you hold any broad U.S. equity exposure, you will automatically own SpaceX stock within weeks of June 12th. You do not get to vote on this. There is no opt-out. Analysts estimate that approximately $27 billion in forced index fund buying will happen in the first few weeks after the IPO, flowing in automatically regardless of the fundamentals, regardless of the quarterly losses, regardless of what Starship is or is not doing. So here's the real question, and I want you to actually sit with it. Is the SpaceX IPO the greatest investment opportunity of the decade? Or is it the most sophisticated wealth transfer ever constructed, where retail investors and pension funds are structurally engineered to buy a $1.75 trillion company controlled entirely by one man, whose primary new rocket does not yet reliably work, while he retains all the voting power and essentially none of the accountability that comes with it? Both of those answers are genuinely possible. That is what makes this interesting. So let's pay everything off. What are you actually buying? You are buying economic exposure to Starlink, which is a genuinely excellent business. You are buying a $1 trillion bet on Starship, a rocket that has never commercially launched a payload. You are buying into xAI, an AI division losing $30 billion a year. And you are buying all of it inside a governance structure where you have no practical ability to influence any decision the company makes. That is the product. The paragraph buried in the S, one that nobody is quoting. It is in the risk factor section, which is standard for every IPO, and which almost no retail investor reads. In that section, SpaceX discloses that Starship re-entry may not in all circumstances prevent exposure of our personnel and potentially members of the public to hazards such as explosions, structural failures, or debris dispersal. That is not scaremongering. It is legally required disclosure, but it tells you exactly what the company itself believes the failure mode looks like. And the number that makes the valuation fall apart? Zero. Zero commercial payloads successfully delivered by the $15 billion rocket that the entire trillion-dollar premium above Starlink's value is built on. Now, the bull case is real and deserves to be said honestly. If Starship works at scale, SpaceX becomes the physical infrastructure of the global economy. Launch costs collapse, satellites get cheaper, AI compute moves to orbit where solar power is continuous, Mars becomes an actual project. The total addressable market, if you are willing to count the solar system, is genuinely without ceiling. Archie Invest projects SpaceX could reach $2.5 trillion in enterprise value by 2030. Scottish Mortgage Investment Trust, which actually holds SpaceX shares in its portfolio, values the company today at $1.25 trillion, $500 billion below the IPO ask, and they are using a deliberately conservative methodology based on verified transactions rather than press speculation. The honest answer is that nobody knows what this company is worth because nothing like it has ever been publicly priced before. This is a bet, not a valuation. The question is not whether SpaceX is an interesting company. It obviously is. The question is whether you are comfortable making that bet at this price, with no voting power, in a governance structure that has been specifically designed so that one person can never be held accountable by public shareholders. On June 12th, SpaceX lists on NASDAQ at $1.75 trillion. You'll probably be able to buy it on Robinhood by lunchtime. 30% of the offering is reserved for retail investors, 3 times the normal allocation for a company of this size. That is unusually generous. Make of that what you will.